Welcome to ClickCity News, your go-to source for the fastest updates on the latest news in the crypto market. It's a day of reckoning for the cryptocurrency market. Bitcoin is down sharply, altcoins are crashing, and billions of dollars have evaporated in just hours. What triggered this chaos? And how can investors navigate the storm? Let's dive into the details. Let's look at the numbers. Bitcoin, the market leader, has dropped by over 6% in the past 24 hours, hitting levels not seen in months. Altcoins like Ethereum, Solana, and Cardano are experiencing even sharper declines, losing as much as 10%. The total market cap of cryptocurrencies has shed billions, leaving investors scrambling for answers. This isn't the first time we've seen such a steep decline, but today's crash feels different. It's not just a single factor. It's a perfect storm of macroeconomic data, regulatory uncertainty, and market cycles catching up with speculative projects. Unexpectedly strong U.S. labor market data has reshaped the outlook. Job openings climbed to 9.6 million in November, even as the hiring rate edged down to 3.7%, and quitting rates fell to 2.3%. This combination points to a labor market that's cooling but still resilient, signaling ongoing economic strength. For the Federal Reserve, this reduces the urgency to cut interest rates, a move that would typically support crypto markets by increasing liquidity. Instead, the Fed's recent 0.25% rate cut left markets underwhelmed as Chair Powell reiterated a commitment to restrictive policies to combat inflation. Powell's statement that the Fed is not allowed to own Bitcoin further underscored institutional skepticism toward digital assets. Together with tightening global liquidity, these factors have created a tough environment for cryptocurrencies, fueling today's sharp sell-off. Adding fuel to the fire is the looming uncertainty around regulatory changes. While deregulation might sound promising for crypto enthusiasts, experts warn it could destabilize financial markets, pushing speculative investments to dangerous levels. Could this deregulation spree lead to another bubble, or worse, a collapse? Critics argue that deregulation, if poorly executed, might bring short-term gains but long-term instability. Analysts have long warned of an altcoin reckoning, a moment where speculative and overhyped projects crumble under market pressure. Today might be that day, as altcoins face steep losses. Is this a natural market correction or the start of a deeper crisis? Investors must ask themselves, how much of the altcoin market is built on innovation versus mere speculation? Are these losses a reality check for unsustainable projects? Crypto markets have always been volatile, but this crash is a stark reminder of the risks involved. Macro factors, speculative trading, and unregulated markets make crypto a roller coaster ride for investors. Today's crash is a lesson in the unpredictable nature of crypto. Diversification, research, and risk management are not optional, they're essential. While the promise of high returns is enticing, every investor must weigh the risks carefully. Don't forget to like, subscribe, and hit the notification bell for more crypto insights. Until next time.